capitalism even became even popular. So when you look at your amazing track record, again, I said you did something right, picking successful companies, publicly quoted. How does it relate to, in your opinion, to these companies? And I'm not pretending they were purely conscious, but
Right.
in which way do you think you already introduced some of the aspect which now we call conscious? Give us a flavor for the successful companies you've seen out there, and you think these elements in these successful companies in terms of their return are conscious, and this is why they were successful.
Thank you. Well, I would say first and foremost, we care deeply what the company does. What is your product, entrepreneur? What is your service? And without being too judgmental about it, do you lead us to a better world? So one of my lines that might be on my gravestone one day when I die will say something like, make your portfolio match your best vision for our future. So I believe that the money that you and I invest, precious money that we have saved, that we've earned over time, we could have spent it, but we actually saved it, which is a heroic action, in my opinion. You should be putting that toward the things that lead to a better world. Now, Konstantin, what you think of as a better world is very likely different from what I think. I bet we have a lot of overlap as friends and conscious capitalists, but I don't pretend to think that, you should follow my ESG list of what I think is the right thing. I encourage you as a fellow human being to ask uniquely, what is your best vision for our future? So from the earliest days, we were counseling our members to make sure that they're part of the entire human connection. Your dollars invested are not disconnected from the world at large. If you invest in this or that company, you're helping them. You are growing them. When a new buyer comes in and buys shares away from a seller, they are increasing the value of that company. So it's very powerful. It's just like the dollars that we spend as consumers. A lot of us try to be intentional with that, especially young people these days, at least in the United States. I would assume the same is true in Spain. Our so-called millennial generation, the young people, are more intentional than I was when they think about who they're supporting with the time that they give as professionals. They want to go to work for a great culture and an important company. They want to use their consumer dollars to make the world better. So from the earliest days, Konstantin, to answer your question, we were saying this matters. And in a sense, if I go to your library and you fix me a drink, it's 6 p.m. or so in Spain, so this is acceptable now. I have coffee here in the US at this time of day. But if you were fixing me a drink, I would be looking at the books in your library as you fix me the drink. And I would say, I know Konstantin better because our books are our friends. And so you can draw a lot of conclusions about somebody based on what they're reading. The same should be true of your brokerage statement, your portfolio. I should be able to look up and down how you're invested, if you're doing so consciously, and say, I think I know you now. I see what you think is a better world. So there are other answers I could give, and I'm happy to go deeper on this one. But at its root, that's how we started, by saying this is all real. The dollars you invest are not disconnected from you as a human being. You can't invest in companies that create bad things in the world and feel good about yourself. You're actually not helping when you're doing that. And the final answer is it works. Turns out the innovators, which is really important to me, the innovators have created remarkable new products and services over the last 30 years, and we've been invested in most of the great ones.
Let me do a follow-up question specifically on your investment angle. And I know that many of the folks in our audience are startup entrepreneurs. Some few may have already gone public, big deal. Many of them are not yet. They may consider to do that. Some of them may want to stay private. So I know that many of them look for capital to be invested in their ventures. And I know that from personal conversations with them that some struggle to find the appropriate conscious money to be invested, given this is actually their charter. What is your view on how, is there a future for investment money to become more conscious? Do you see more venture capital, private equity, or other private investors' funds to become more aware, to become more conscious? Do you think, don't lose hope, that money will become more conscious because they see the rewards for it? What's your view on how conscious you think investment money will become over the future?
Well, of course, it's hard for me to know exactly what it's like in Barcelona or in Spain or in Europe because I don't spend every day in Barcelona or Spain or Europe. Speaking only for the United States, I would say that there is far more conscious capital than existed 5 years ago, let alone 25 years ago. So I feel as if one of my watchwords is you get the investors you deserve.
Okay.
And so I would ask each of you to work hard or harder if you don't feel as if you're finding the people to invest the financial capital in you, the human capital that you're partnering with when you take in financial capital matters a great deal. And I have that, my experience at the Motley Fool, and we can talk some more about that if it's of interest. We've had some great and some bad experiences with the capital that came outside into our company. We've learned a lot about that, but I truly believe that there's more conscious capital running around the world today, and the world wants you to succeed. If you're an entrepreneur with a good product, a good service, something that improves the world, something that doesn't hurt the environment, something that makes people happy, the world wants to invest in you. So I would encourage you to ask yourself first, am I doing that with my product or service? And even if it seems like something neutral, like let's say banking, I mean, there can be conscious banks and unconscious banks, right? It's not, you can't just judge oil companies based on them being oil or banks being banks. I think it's the nature of your product or service, your business model, your angle. And I truly think that if you have a conscious capitalistic orientation in your company, that capital is out there for you. And if you're not seeing it, I would encourage you to just keep looking and look harder.
Okay. Can you share maybe a positive and another anecdote where you said that we had actually made a lot of experiences in the Motley Fool with this very same question?
Yes. So when we first went out for capital ourselves, we went to some of the best firms in America, in Silicon Valley and other places. And we were in a position where we could kind of choose our capital. So that was very advantageous. We were very fortunate. I could explain the conditions behind that, but I'll skip that for now. So we got the investors that we wanted, and they were on our board. But one of those investors over the course of time, because of the nature of venture capital, we're very long-term minded. We did not want to go public. But many venture capital funds today remain set up. They end after 10 years. And so this investor was in us for 8 or 9 years and began to push us to go public. And ultimately, they tried to launch a lawsuit against us to force us to go public under the rationale that they would, as a fiduciary, they would get a better return for their investors if we went out to the public markets. And so they were trying to force us to go public. I'm happy to say that did not work. Again, I could talk more about that if you like, but the main lesson is that that was the very same investor that we loved at the very start. And indeed, I would say that overall, they were a wonderful investor and they added a lot of value to our company. And I'm sad for them that they did not get us to go public. At the same time, I'm very happy that we had reached a place where they were a tail trying to wag the dog, and tails don't wag dogs. And so the nature of how it played out over time was that we managed to keep our company private, which I'm very happy to say 29 years later, we still are. But so I would say that it's a mixed bag. And sometimes people change, times change, contexts, one of my favorite words, context changes. And so you have to be aware of that and conscious of that. I don't know if that's a helpful answer or not. And again, I can talk more about that if the group is interested in those kinds of stories. But that was part of our experience. In general, we've had wonderful experience with our conscious capitalists investing in our company. You also mentioned earlier, I look at a lot of other companies, I invest in them. So I've seen many other examples that I like or don't like in terms of the public markets and how private equity has behaved.
Let's actually go on that route and let's have you a little bit compare.
Great.
When you look, specifically because you look at so many companies, you should be in a great place, having done this for 27 plus years, to compare. If you had to make a little bit of a high-level aggregate checklist of in which ways do conscious companies differ from traditionally run companies? What would be that comparison list of your top 2, 3, 4 items be?
Yeah, top 2 or 3 or 4 items of the conscious ones versus the less conscious ones. I think number one is, and it's easy to say, it's actually much harder to do and to be long-term. I truly believe that the great companies, whether they're public or private, are managing for the long term, the only term that counts. So there's only one company I'm probably ever going to start or work for, and it's our company. And I hope that when I die, I give the shares of ownership to my children and to charities. We're going to just keep managing this business forever, I hope. That is the ultimate long-term orientation. And as an investor providing investment advice, what I've always said to Constantine, our members, is buy and hold and buy some more and buy some more. And don't worry so much about selling. So it comes down, number one, to what term are you playing your game with? And guess what? You're going to get the investors you deserve. So if you're not playing a long-term game, you're probably going to get what we call hot money. It's going to be shorter term. They're hoping to make money off your IPO and then they're out and they move on to the next thing. So I think number one is that long-term orientation. Number two, it's very evident to me, where are the companies that people love to go to work? The culture. That's one of the 4 tenets. I know our group today is already familiar with the 4 tenets of conscious capitalism. That's part of your orientation. You know this. So the importance of conscious culture, at the heart of it, are people excited to be part of your organization? Mainly your employees, but of course your customers. Are they excited, proud to shop with you, to do business with you, your partners and suppliers? Is it an honor to be a partner and supplier of your company, or are you honored to be supplying your companies that are buying from you? So I think that culture is very evident. You know, one tool that we have in the United States is Glassdoor. Some of you may be familiar with Glassdoor, but assuming not everybody is, it's a site where employees report how much they like their workplace and whether they approve of their CEO. And so it's not always right. Some companies have 7,000 employees and 5 reviews on Glassdoor. That's not very representative or important. But some companies have hundreds or thousands of reviews. And I think even if it's just sampling 10% of the employee base, it gives you a pretty good read. And, you know, related to the culture, number one, related to long-term, and number two, the culture, is the loyalty effect in place for every business. And there's a wonderful book by Fred Reichheld, a Harvard Business School professor, called The Loyalty Effect. And Constantine and everybody, my new friends, it tells us that the best, most successful enterprises have great loyalty from all of their stakeholders. They have customers who've bought for a long time. They have employees who stay there a long time. They have partners and suppliers, that they have board members. They have shareholders who stay a long. If you can add up the years of loyalty to an enterprise, I'm always going to buy the stock of the company with a lot more of that than the company that looks like the same company, but doesn't have that same degree of loyalty. So those are a few factors that I look at, of course, in the companies that I'm investing in and that I recommend you buy shares in. And it's the same thing we try to do at our company too.
So I propose one of the tricky questions, because there's no exact answer. There's obviously nobody who predicts that you would make a statement that predicts or promises anything. Zero of that. However, going down the drain of comparing these two worlds, and already talking 2 worlds, every company is different. There's a lot of gray in between, obviously. The theory goes, a lot of cases actually prove that conscious companies done well will actually return higher returns, even though at initial point, the investment in stakeholders, the investment in communities and nature, environment, the investment in employees may at first sight appear as more costly. The question, and I repeat, there's no exact number, there's no bucketing, as simplified as it may sound in the question, is what kind of rates of returns differences have you seen? Just to give not only the investors, but mainly the entrepreneurs on our side, what is a range of actual financial performance that you see in conscious companies that do get it right? And it's not easy, it's not forever. This can be at risk anytime. and conscious companies that went to a very difficult situation. But give people maybe your best guess of ranges of what kind of performance you've seen is possible with conscious companies, way and above the average, because that's one of the big claims of conscious capitalism.
Right. Well, first of all, I don't think conscious capitalism should have to make that claim. I don't think we should always just be scoring it based on the returns. And yet, my own experience is that the returns are superior. And I think that I've demonstrated through the transparent work that I've done in public for almost 3 decades that they far exceed the returns of the average. And keep in mind, at least in the academic world in the US, many academics say to do better than average of the stock market average would just be luck. That is part of the conventional wisdom of our world today. And that's why I'm a fool, because I don't like conventional wisdom. And I firmly have always disagreed with that. And I've tried to prove through my work and Tom and our work at the Motley Fool that indeed it's not luck to be better than average. For professional basketball players, it's not luck to be better than average for them. For surgeons, it's not luck. But for some reason, for stock picking, it's been perceived that it would just be luck to be better than average. Of course, I completely disagree. So it's hard for me to state a range other than I guess I would say, first of all, that I have seen conscious capitalism enterprises that have been mediocre and have returned very poorly. I'll give a quick example. There is a company called Interface, which is a carpet tile company here in the US. There's a beautiful documentary film about the founder who decided that he had something to contribute to the environment. And so they decided to go carbon neutral by 2020 in the year 2010. And that was very early. Like many companies in the US and Europe is a little bit more aware of the environment than in the US, I think. But anyway, for the US, that was very early. That was one of my stock picks. I've held it for 10 years. It's where it is today. Where it is where it was 10 years ago. And it's a recommendation. Constantine, if you are one of our members, you may have bought Interface, ticker symbol TILE, a company that I still admire for what it does. They make modular carpeting, right? So rather than just a big industrial carpet for your office, they make little tiles. So if one gets spilled on, you just pull that one out, drop another one down. And they're incredibly caring about the environment. So, I mean, I admire that, but at least from a capitalist, not just conscious, but a capitalist standpoint, they have failed to create real value above and beyond just treading water for 10 years. So I know of companies like that. And there are companies that tried to do the right thing and failed, went bankrupt altogether. And many of the best companies of our time have been spectacular performers and wiped out any mediocrity. I'll give a quick example. In the US, Salesforce, which is a global company today, ticker symbol on the US markets is CRM. Salesforce, when it was founded by Mark Benioff 20 plus years ago, they from the first day said we're a 1-1-1 company. 1% of all of our revenue will go to charity. 1% of all of our product will go to those who can't afford it. And 1% of all of our employees' time will be theirs to volunteer for whatever organization they'd like. That's a beautiful model coming from a cloud software company. They don't have to do it. It doesn't seem to make sense for their business necessarily. And it's worked brilliantly. And Salesforce is up 50 to 100 times in value from its IPO. And even just one Salesforce, Constantine and everybody watching me right now, even just one Salesforce, that return alone beats all of the averages when you throw in all of the losers, including Interface Carpet as well. So it's my experience that the spectacular companies that are conscious are so great that they will lift your returns, my returns. I've demonstrated that for years now, well beyond the averages by pursuing conscious capital. I will just share with you for fun. I think I can share screen here. And I think it's going to let me. So I'll just share screen real quick. And I'm going to show you, if you're seeing my screen.
Yes, we can.
Yes, it's just a set of companies that I picked this on a television show 5 years ago. I had a skeptic. I was debating a skeptic on a public television here in the US. And this is not the only group of stocks, and this is not the only time I've done this, but this I can just show you. These were the 5 companies that I said, these are conscious capitalism companies. And I said, they're going to beat the market. And as you can see, it was November 13th, 2019. So 2 years later. Now, again, this is not a representative sample. This is just 5 companies, but I did this on television in a debate. And you can see that the market average, this number right here, the stock market, S&P 500 in the US is up 48%. Really happy to say that of these 5 companies, one of them has lost to the market averages, Ecolab, which is a wonderful company that cleans up our world. It's up 18%, but during COVID, there's been a lot less to clean up, and their business has dried up, ironically. And just take a look at the other 4 companies. I could explain more about these companies, but we don't have to. It's not about these companies.
No.
There's Salesforce, by the way, but look at Etsy and look at that spectacular performance. And as an average, this group of companies has crushed the market. This is only 2 years later. Now, these returns are well beyond what I would have expected or thought of at the time. And yet it's just consistent with what I've been doing for 3 decades now, which is I have my losers, but I'm okay losing. Our winners well outweigh our losers. And this is just one example of 5 conscious companies. I've done this many times over the last couple of decades. So anyway, there's a quick look into an example of some companies. None of them is perfect, by the way, but those are what I invest in. And that's the counsel that I've been giving for a long time.
I got a question here on the Q&A board. I'd love to pick it up. Actually, still on the investment side of David Gardner. And after that question, I'm going to move to the entrepreneur, David Gardner.
Fun.
And the question is from Jorge. Thank you. And it says, how could investors help better, particularly the institutional ones who move the needle, to make capitalism a more just and inclusive system? The Business Roundtable, Stakeholder Capitalism, and Shared Value Initiative, even our own conscious capitalism movement, are being criticized, fairly or not fairly, for our seemingly poor achievements or impact. The recent meeting in Glasgow is one example. Does the world need more of the healthy pressure and business activism from investors? Are investors, conscious ones, making a big enough impact? And maybe what should they do differently to improve the impact? That's a great question.
It is a great question. And Konstantin, if it's not impolite of me, I would like you to answer that question from your perspective, because you've been following this as long as anybody else. I will also give my answer after you, but I don't want to pretend that I'm the expert when I'm talking to you, and you're being very humble and gracious to ask me the questions. I have an answer I'll give, but what's your take on that?
So there's 3 things that come to my mind regarding this question. Number 1, I think there's still a short-termism, which has to do with the ability to measure, the ability to feel, the ability to sometimes tangibly touch a return of an activity that I do. This is part of what happens to us as humans. I think it happens what happens as entrepreneurs and business people, is how immediately do you get a feedback, and short-termism is just one aspect of it. The type of metric which makes it specific, tangible, is another symptom of that. And the further out you go, that has aspects of complexity, that has aspects of the difficulty to measure things, that has aspects of the long-termism, they all make it more difficult to get a tangible, immediate feedback on your action. I think this is a real issue. The second one is a little bit philosophical. I'm going to super short of that. There's a significant hypothesis upon the Western capitalism world, which could be questioned, which is that more money as the only measure of success will bring me more happiness. Well, there's lots of research in positive psychology which says this is not necessarily true. And yet this singular focus on this one little metric versus what benefit being a purpose-driven company matters, there seems to be a deep philosophical, cultural issue that we have with this obsession and the assumption, if I have more money, I can buy happiness in all its variety. These are 2 aspects which I think are holding us back. I didn't go into any institutional aspects. I'll leave that aspect to you in terms of us as a movement or other movements or investors. I'll leave that flavor and any other flavor you want to add to you.
Thank you. And thank you for sharing that. And, you reminded me of wonderful work related to conscious capitalism. This comes from a different organization, but I'm going to mention it because I think that Jorge and anybody who recognizes it's about more than just financial capital, I think you'll appreciate the work being done by the economics of mutuality. So if you Google that phrase, you'll see more about this. There's a wonderful book called Completing Capitalism by Bruno Roche and Jay Jacob that I highly recommend. But let me just say that the authors, in a nutshell, the authors say there are actually 4 types of capital. And most of the time, people only think about the financial capital. But the authors say there are 3 other really important types of capital. Human capital, how we treat each other. Social capital, the trust that we build with each other. And natural capital, the environment that surrounds us all. And the brilliant work being done by the Economics of Mutuality group, they have found measures for each that help you measure each. And it doesn't just come back down to financial capital. I'll add briefly that a lot of people celebrate so-called triple bottom line companies. You may have heard that phrase. And, most of us think that sounds good because we're like, hey, that's better than just the bottom line, right? Triple bottom line. But the authors are somewhat critical of triple bottom line for this reason. Often what you're doing is you simply are converting other things back to financial capital. You're still in the end using the almighty dollar, as we say in the US, to score everything as triple bottom line companies. And so the authors have over 20 years developed measures that let you measure your social capital that you're generating, your human capital, and your natural capital. So to Jorge and everybody else who thinks it's about more than just money, I agree with you. And this is something of deep concern to me. One other thing I'd like to add to your answer. Thank you for your answer, Konstantin. And I said I would give a brief answer. I'll just say that the reason that I love conscious capitalism and believe that investors will be rewarded, private equity investors, venture capital investors, public market investors, if they invest consciously, is because if you're doing it right, you are an owner, not a renter. And one of the reasons that capitalism before conscious capitalism was not very rewarding in any long-term sense in the US and around the world is because the owners weren't really owners. If you said it's all about the shareholder and corporations exist for shareholders, today, much of the institutional world are not owning those shares for any meaningful period of time. So if we're pretending that they are owners and it's about shareholders when they really don't care, in the United States today, the average mutual fund publicly has only 30% by the end of the year still invested in what it started with on January 1st. So if it has $100 million, 70 million have traded out of what they owned at the start of the year. That is not owning. That is not shareholding. We as conscious investors and we as foolish investors, in my case, we own. And so truly, if it were about maximizing shareholder value of true owners, I would be a bigger fan of that. But I'm not a fan of so-called shareholder-focused capitalism. I'm a big fan of stakeholder-focused capitalism. We all know that's the second tenet of conscious capitalism. So I really wanted to be clear about the difference. And this is not just true of private equity or just venture capital or public. I mean, there are good and bad, conscious and unconscious investors in all of these buckets of different investors, but it comes down to who's actually owning.
Let me ask a related question, which was pre-submitted. So again, I'm referring to the audience here.
Great.
Which refers to the EU, without going into detail, apparently preparing a kind of a corporate social responsibility and business contact law. The observation is obvious. They seem that this is the better way to do and to manage business and to actually take care of many of the negative collateral impacts. And the question then, similar to Jorge's question, would be, do you think it is actually smart and necessary that lawmakers, we don't have to go into any details or examples, scrutinize how business is done, and for some of the things which may seem obvious, make it mandatory? Do you think this is something positive, or should it be let the free market figure out what's the better way to do it?
Well, first of all, I like different approaches. I'm not sure. I can't answer that either way because I could see how it could work and I can see how it would not work depending on how it's implemented. So I don't think there's a clear yes or no to that. My own tendency is to feel as if less regulation leads to more innovation, leads to better outcomes. And certainly, at least in the US, there's a history of regulators getting captured at so-called by the regulations they're enforcing, ultimately defending the industries that they've been regulating initially, and then they're stopping any competition 2 decades later within those same industries. So I think there's danger of regulatory capture that you'd have to be guarding against. But if you're saying that government wants business to work harder, do better, and trying to put that into law, if you're saying that aspects of conscious capitalism would be hardwired or built into the foundations of companies, that sounds generally good to me. So I think I would have to, I don't know the responsible business initiative in the EU. I haven't looked into it, but I try to have a 360-degree view and be integrated with my thinking. So as I said earlier, one of my favorite words is context. So I would need to see the context around that. I'd need to see that in more depth. In general, I prefer a free market approach, but not in every case.
Okay. Well, we have a question from Thomas Schmidt. I know that you know him.
I do. Hello, Thomas.
Hi, Dave. If we all would hold our shares for so long, would it not reduce market liquidity and prices would stay lower too? And aren't speculators part of the game?
Well, I think speculators always are part of the game. And indeed, there's a lot of speculation happening, Thomas, as you know, and as we see. So there's so much happening that it's hard for me to imagine a world where people are actually holding in the foolish way that we do. So I think part of our advantage is that we're playing the same game as everybody else, but we're playing it differently. And so it would surprise me if we ever got to a world where people held their shares for so long. But playing the game that way, we're going to continue winning as long as they don't, in my opinion. Okay. And I guess I would only challenge the notion that if you hold things, I agree that that reduces liquidity, but I don't necessarily agree that prices would stay lower just because liquidity is reduced. I don't think that doesn't follow logically for me. I think that assets can appreciate in time without any liquidity. A beautiful piece of land is going to gain value over time, even if people aren't actively selling it back and forth to each other. I'm not persuaded that activity in the markets is driving up values. I think values will out over time anyway.
Good. Let's actually have something related and move more into you as an entrepreneur. And a question which bridges that gap is, there's actually some folks here who recently went public. Very active, known personally, great conscious protagonist. And the question is very obvious. Now that they're being public, how do you remain conscious after going public? There's different pressures, more pressure from the financial markets, etc. Have you seen examples? And anything in terms of what you have seen, talking to people of this is how you secure and ensure that you stay the course and stay conscious, even in a public company?
Well, first of all, congratulations. That's something that we've never done. I think it takes courage to do in the markets in some ways. So too. And I don't just mean in 2021. I feel the same in 2011, 2001. The Motley Fool has existed all the way through there. So anyway, congratulations. And I'm assuming that you went public in order to raise visibility for your enterprise, to acquire capital and new owners to grow your business. And it's a wonderful tool. In fact, if companies never went public, I wouldn't have much to do because all I do is provide recommendations of public companies. So I'm grateful when companies go public. I'm excited when there's a new share that I can buy or recommend. So thank you for that. And then how do you ensure that you don't go to the dark side? How do you ensure that you stay conscious? I mean, for me, first of all, tigers keep their stripes. So I would say that most companies if you started at a conscious place, you have a great advantage over the rest of us who may not have. And as you go public, you have much more likelihood of remaining a tiger with your conscious stripes than not. You're not all of a sudden going to grow new stripes as a public company, I don't think. The worry is the short-term pressure, the nature of financial reporting, the media today, could force you to begin to act differently than you did, I think, as a conscious private company. If you're even aware of that, if you're even thinking about that or care about that, some people don't. They just want to go public. They're maybe just looking for an exit. If you are thinking that way, you're already on the road to success, I think. If you're asking that question, it shows that you're self-aware. And do I have great advice for you? I don't, because I've never done it myself as an entrepreneur. I wouldn't want to pretend that I have the easy guide to do that. I will say this, though. There are many exemplars. The companies that I showed you on my little spreadsheet earlier, many of the companies I've recommended that I still hold 20 years later, they're a lot bigger than the day they went public today, because they kept managing for the long term. They kept winning for all of their stakeholders. So I know there are hard times, and we've experienced it ourselves as a business, and the stock market has declined dramatically in 2001, 2008, 9. During COVID, the US stock market anyway lost 1/3 of its value in a month, just less than 2 years ago. So these things are going to keep happening. But I think that if you're in it to win it for the only term that counts, and if you're communicating that to the world at large, that you're a long-term enterprise, you're a conscious long-term enterprise, I think you're on the road to success.
Thanks.
Thank you. It's a non-answer. I mean, you shouldn't thank me, because I really don't know what to say, because I haven't experienced it other than I admire it, and I wish you the best. We need you to do that well. You'll be an exemplar to others, and I'm happy to say you won't be the only one. I think there's some great companies that have done that well for long periods of time.
Well, let's jump into the Motley Fool as a conscious company. And you're probably too humble to call it a truly conscious company, and probably too humble to even call yourself a conscious leader. So I'm going to ask a question more generally. What do you think makes a conscious leader?
I think a conscious leader, more than anything, is growing through self-awareness, through world awareness, trying to be relevant, realizing what you started with 10 years ago may not be the right solution today. You're growing. There's a wonderful line that Tomas and others who I've shared time with at CEO summits, there's a great line I've heard as a conscious capitalist, which is an organization cannot outgrow the consciousness of its leader. So there's a glass ceiling over top of your organization, and it's your level of consciousness. And so if you want to grow, if your organization is striving to grow, you need to grow. And so I think that we know that in ourselves. We know if we're growing or not. We know if we're living or dying. We know if we feel good or not about where we are. It's harder to know that of other companies. When I provide a stock market recommendation, I make guesses. I think I can recognize the innovators and the growing leaders, but I would say, Konstantin and everybody else, that number one, it's about personal growth that's evident to the world. And it's evident through the actions of you and also of your enterprise. And I certainly am a more conscious person than I was 10 or 30 years ago today. I'm not saying I'm world class. I'm not even the CEO of our company. You asked this earlier, my younger brother, Tom, is the CEO of our company. So I'm not even here to hold myself out as a great example of a CEO who's conscious, but I invest in a lot of them. And I think that's the number one thing I look for.
I'd like to double click and have you talk a little about great conscious examples and experiences. And I perfectly know, and the audience knows, every company is different. Every culture is different. It has to fit your own personality, the ones of your employees, the customers, the business, et cetera, et cetera. And yet people like to refer to examples, and there may be some inspiration. And so if we double click on the culture, a very unique, foolish culture you built on the Motley Fool, I'm just going to pick on 2 examples. Okay. You can comment on those. You can comment on any others.
Thanks.
For example, I heard in an interview that you did that you don't count any working hours or vacation days. You trust that people are mature and grown up and conscious, so that they work the hours they need, they take the vacation that they need. You actually had a fool's errand practice, which you may want to talk about. And I know that your brother Tom, at the conference 4 years ago, he mentioned that you had a day, I don't know if this is a regular yearly event, where you specifically invite employees, ask for a raise. So all these practices are kind of counterintuitive towards more traditional ways how people are managed in cultures. Floor is yours to comment on those three or more.
Well, thank you. And yes, those are all true. Those are all part of the Motley Fool culture. So to take them in order, the first one is that we've never counted vacation days or hours at our company. And there's a very real reason for that. When we started as a company, we didn't have any money to even advertise new job positions. When we made our first hire that wasn't named Gardner, we had almost no capital to do that. So who did we end up hiring? The answer is we ended up hiring our cool, fun friends from college who were willing to take a risk with us and go to work for our enterprise. So you can imagine, Konstantin and my new friends, you can imagine that we're not saying, oh, you have to be here at 9 o'clock in the morning. Also, you have to stay till 5 o'clock and you only have 5 vacation days for your first year. Those were all the things that we would never have thought to say. So without being intentional about this, but just reflecting on the past, we started with a trust-based culture. And that has always been true at the Motley Fool. We have always assumed the good of people, and we've hired good people, and we don't always get it right. Sometimes people can abuse that trust. Sometimes people are not working as hard as they might, or not as successful as we hope that they would be. But we have been so dramatically rewarded. Our enterprise has grown so far beyond our dreams, and we've always led with trust. So that feeds everything that we do at the Motley Fool. So in the number 2 example you gave was the Fool's Errand. I'll briefly explain that. This made even more sense before Zoom and before virtual. But so, picture the last 16 years, not the last 2 for this, because what we would do at our monthly all-employee meeting, at the end of every meeting, is we would randomize, pick a name out of a hat, one of us, and that person would be given $500 or $1,000 and told, go away for vacation right now. In the next month, we'll see you. You're gone for 2 weeks. And it's called a Fool's Errand. And you can do whatever you want with it. And you can come back and tell us the story at the end, or you can not share the story. And why did we do that? Well, first of all, it made it much more fun to stay to the end of each of our all hands meetings every month. And by the way, if you had been with us 17 years, you got 17 little votes. Right? If you were with us for 1 year, you got 1. So the probabilities favored loyalty. But what it did is it led to 2 important things. One, a quick sabbatical as a surprise. And good surprises are some of the most fun things in life, a good surprise. And so people came back and told stories about what they did for those 2 weeks that inspired all of our other employees. The second thing that it did is sometimes that was a critical teammate. And wait, we can't lose Konstantin this month. We're launching a product and Konstantin is the product owner. And the answer is, well, guess what? You're going to have to figure that out. And so it forced us not to have single points of failure and to be there to support or understand or to react, to evolve or adapt, which is what the human species has done for a few millennia. And so it was a good practice. So that's the Fool's Errand. And then the last one that you mentioned, which ties back to trust for me once again as well. And it was the ask for a raise day. That's not something we do every year. That's something that we experimented with a few years ago, and it worked. So we'll probably do it every few years. But yes, it seems crazy, doesn't it? Just like it seems crazy not to count your vacation days or your hours, or to just say you're on vacation now. Sorry, you just lost a key member team. Those all seem crazy, which means they go against conventional wisdom, which means they're foolish, right? And so it is our nature to try to invert or subvert tradition. And by the way, it doesn't always work. I'll give an example if you like of when it didn't work, but ask for a raise day did work. And why? Because we know that many people tend not to do that. And certain types of people, women are much less likely, statistics show, to ask for a raise, to think, hey, my worth is not being recognized in full by my CEO. So I'm going to go ask for a raise. And sometimes in some cultures, if a woman does that, she starts looking uppity. That's maybe an English word, but she starts looking like that's not an employee we'd want at our company, an aggressive woman. Whereas when men do it, people don't think twice about it sometimes, right? So it equaled the playing field a little bit. Also, another example, introverts much less likely to ask for a raise than extroverts. So you can see how it subverts a lot of tradition, and there it served many business benefits. One was to make sure that we understand together whether you are creating more value than you think or not. So it was an opportunity for my brother. It was his idea to let some people know, just so you know, that's not actually as valuable as you think. I need to educate you better about the business that we're doing together, because I see you're working hard, but you need to work a little smarter, maybe not so hard in some cases, right? So there are opportunities to clarify, what do we want at our company? Why would we give you a raise? And just so you know, anybody who even raised their hand and went through the ask for raise, they immediately got paid, I think, $100 or $500. In other words, there was instant monetary, no questions asked benefit to raising your hand and asking for a raise. But I think it was anybody can copy. Go ahead and copy this at your business if you like. And we're not going to do it every year, but it made sense for where we were, and I'm sure we'll probably bring it back.
I'm going to jump into stakeholder integration as one of the key tenets. And there's a pre-submitted question here too, I'm going to refer to the audience, which said, now that we got a little bit of better flavor what the Motley Fool is about, the way you tick and the foolish culture that you have, you need an ecosystem, stakeholders, suppliers, vendors, outside parties, communities, etc., to actually function. Already obvious. And one of the questions, curiosities, was how do you ensure and make them part of a stakeholder ecosystem? And not all of them from day one may be as foolish or as compatible to the Motley Fool, or even conscious. And then one of the questions was, do you actually try to work them through that and help transform them? Or do you just outright, we only pick and pre-select folks that actually can be part of that bigger stakeholder family? What is your approach to stakeholder integration?
I love that question. And by the way, we're going to run out of time really quickly. If I give a long answer, this hour will be over. So I'll give a shorter answer. Shorter answer. So I will say that, first of all, if you can find the right customers, if you can find the right investors or suppliers that fit with you, then yes, I would say if you already have that advantage, if you have that in, then I think it's going to be a much better, cleaner business to run than if you're having to convert, evangelize for things to people who aren't there yet. With that said, we don't all have the great advantage of having the perfect customers, the perfect investors or suppliers. And so I guess what I would say is, if you would let them know that you're trying to create a win for them, which might surprise them. Many partners or suppliers are used to trying to be squeezed by who they supply. If you say, we're actually here to create a long-term partnership and win together, long-term, different from the short-term everybody else is playing. And if you let them know that you are curious what is a win for them, don't assume that you know what a win looks like for your employees. Don't assume you know what a win looks like for your suppliers. Ask them and incorporate include their conversation or their viewpoint in your plans. If you show them that way, you will look so different than their other partners, than the other companies they work with, because you're actually trying to win for everybody. That's inspiring. And by the way, it works. It doesn't work every time. Sometimes it fails, but it's worth trying. And when you succeed, if you do, you will be well beyond your dreams in terms of your own growth or your possibilities. And you will have really made a great contribution to the world.
Okay, let me give you the stage for the last question, and then you can broaden the question to make it as inspiring, motivating, kind of as a closing remark as you wish. And it goes back to the power of and. Many people in the audience, all of them I know, convinced conscious capitalists, and there's a ton of things one would want to do, could do to be more conscious, and I'm sure that all of them believe in the approach. And yet there's day-to-day business constraints, things to be decided. There's so much in the budget. So there's a lot of day-to-day, which is, but I'd like to do it, but this is not compatible, so I'd like to do it, but. How do you live this constant conflict at a conscious capitalist, that doing it cheaper, doing it in a more short-term way, cutting some corners, that may work, and yet it's not the long-termism, and actually the power of and. You can articulate some examples that you have, or just be as clear as possible to motivate people. Go for the and, a responsible business without trade-offs.
So I truly believe that there's a fear-based approach to life, and then there's a love-based approach to life. And I believe that they're directly opposite each other. And so I think that the best entrepreneurs and the best businesses are motivated by love, a word that many people are not comfortable using usually in business circles, but it's so human. And I see it every day in our culture, in our offices, and how we treat each other. And I include our customers as well. So if you're taking that approach, that is the and approach. And I understand it's not easy and it's not perfect. So if you're communicating as a leader that you're just doing your best, and you know sometimes you have to cut corners, I hope you're never going to compromise your values. There is a remarkable Inc. magazine, which is a big business magazine in the US. I saw a cover of Inc. magazine a few years ago saying the next Steve Jobs, and it was Elizabeth Holmes, who created a company, Theranos, which had a lot of Silicon Valley funding. I'm sure a lot of you know this. It was a fraud. The next Steve Jobs on the cover. I would never cut a corner like that. But if you're saying I can't do it perfectly, welcome to the club. We're all muddling through. We're all failing as we try to succeed. And so if you're simply showing your vulnerability and humanity in that to those that you work with, whether your employees, your investors, your customers, that's admirable. And if you're trying to do better, that's probably going to work for you. If you're not trying to do better, guess what? I don't think that's going to work so well for you. So I think we can all sympathize with somebody who's trying to do better, knowing sometimes it's not perfect. And indeed, your conscious capitalism won't be around. Your company won't be around if the capitalism isn't working for you. So, and maybe that for a lot of us as entrepreneurs, we're used to failing. Maybe we need to try something different again. And you know, I encourage that as well. That's the best, quick, generalized answer I can give and end us at 7 p.m.
Thank you so much. Indeed, Alfonso started us with being, we're Swiss and we start on time. We're German and we finish on time. David, thanks a ton. This was great. Thanks to the audience for all the questions and the participation. And we loved to have you here. And how can I say it? Fool on.
Thank you, Konstantin. Fool on to you. And I want to thank you and Alfonso and Claudia for reaching out to me. There are two brothers, not just one, but Tom is the more important one. But thank you for including me. And I would like to say my email address is davidg@fool.com. If anybody wants to reach out or has further questions, that was my email address 30 years ago. It probably will be 30 years from now if I'm still around. So thank you, and fool on, Konstantin and my friends.
Thank you so much. And with this, we're going to close the webcast. Have a great evening, everybody in Europe. Bye-bye.